If your car looks like trash, it may not actually be worth writing off anymore. Okay, I'm just kidding, because if you actually use a vehicle for business, then you should be claiming deductions for it. But there's a few ways that you can go about claiming vehicle expenses, and there's a few things you always want to keep in mind too. So first off, there's the standard method and there's the actual method. The IRS has a set standard rate that they give business owners every single year. So for 2025, the standard rate is 70 cents per mile. So you take the total business miles that you drive, multiply it by the 70 cents or whatever the year is, you multiply it by that set standard rate, and that's your deduction for the year. Now the other option is the actual method, and this will require you to keep a little bit more documentation, but irregardless, you should be documenting your miles, whether you're taking the standard method or the actual method. I would download some type of app to my phone to help me document those miles, because that is critical if you are ever under audit. Vehicle expenses are one of the most disputed items under audit, and you want to make sure you have enough documentation for that. Going back to the deduction, essentially the way how the actual method works is that you have to document the total miles driven, both business and personal, and you get that percentage of whatever the business mileage use was, and you take that percentage and you apply it to all of your expenses for the vehicle. There's going to be gas, repairs, maintenance, new tire changes, car washes, and the big one, depreciation. Now again, depreciation, vehicles are depreciated at 5 years, but with bonus depreciation and Section 179, you can get a little crafty with this. With Section 179, if the vehicle weighs over 6,000 pounds, the vehicle qualifies for Section 179. If it's under 6,000 pounds, then it doesn't qualify for Section 179, and you can only use bonus depreciation on the vehicle at that point, right? That's a different topic for a different video, but the last thing I want to leave you off with is documentation, documentation, documentation. Please make sure to keep documentation of your vehicle usage for business, and also don't forget, right, if you are in a high tax bracket, deductions are a lot more powerful in high tax brackets. And there does come a point whenever you take so many deductions, you knock yourself from the 35 down to the 12% marginal tax bracket. Well, guess what? Your deduction is not worth as much at the 12% marginal rate as it is at a much higher rate. So the lower your income is, the less powerful those deductions actually are.